Hey everyone, Daniel here and welcome back to another video. Here today, we gotta talk about Coinbase versus Voyager Digital. In this video, we're gonna take both of the stocks side by side and compare them using 2021 numbers. Here's the format. First and foremost, we're going to take a look at Coinbase stock, take a look at their Q1 2021 financial results, and try and estimate potential numbers for the remainder of the year. Then we're going to do the exact same thing for Voyager Digital, using their numbers for the past few months and try and estimate 2021 numbers. Then we'll find out some valuations, compare the two, and I'll add some commentary on my opinions on this entire thing at the very end. So if you enjoy these updates, please consider subscribing and let's get into it, guys. First and foremost, this is Coinbase's Q1 2021 financial results. I did make a video going through this yesterday, but I just want to give you guys a brief rundown as to exactly what we got. $1.8 billion in total revenue. That is the total revenue that we got, and from that, net income of $771 million. We had a net income margin of 42.8%. So for every $100 in revenue, we got right around $42.80 in net income going down to the bottom line. Phenomenal margins at a company like Coinbase. Now, you see all of the different expenses here, like transaction expenses, technology and development, sales and marketing, general and administrative expenses, and other operating expenses, which give us a total operating expense margin of 45.2%. We then have an operating income margin of 54.8%, essentially almost $1 billion in total operating income. Now, the company pays a tax rate of 22.6% at this moment in time, so once we factor in taxes, we get net income of $771 million, right around 42.8% of total revenue. Now, what's phenomenal about this is we can use these numbers going forwards throughout the rest of the year. One main thing, though, is this sales and marketing expense will increase substantially as a portion of revenue moving forwards, right around to 12 to 15%. So, moving forwards, this net income margin that we had will decline. And we're going to take a look at this projecting forwards here in a second. But we also have to consider the fact that in their conference call yesterday, Coinbase says that they're currently on track to match trading volume in Q1 in Q2. So what we can expect, prior to this whole situation, some people were thinking that Coinbase's revenue might decline substantially going into Q2 due to the increased amount of transaction volume in Q1 of 2021. But by the looks of it, there's a lot of hope going into Q2 that transaction volume will remain the same. So what we're going to do when projecting out to Q2, Q3, Q4 is assume that revenue stays the same, and that essentially we don't get that sharp decline in total revenue, which is, potentially being a little bit optimistic. We'll see if what ends up happening, but there are two sides of this whole situation where some people think that revenue may continue to decline throughout the rest of the year, while others say we might kind of stagnate or drift up a little bit higher. Either way, let's take a look at my Q2, Q3, Q4 numbers. Moving forwards, this is what I think is very likely for a company like Coinbase. Total revenue, $1.8 billion. I think that might stay the same. Again, we might be a little bit conservative here, but I'm going to remain conservative with my Voyager numbers as well. So using this $1.8 billion, we have to remember that sales and marketing expenses will increase to 15% from right around 6% previously. That will cut into profits. That gives us then a total operating expense margin of 53.6%. So you have to spend $53.60 out of every $100 in revenue on expenses. This gives us operating income of $835 million. And then once we get rid of that same tax rate of 22.6%, since we know that the tax rate for something like a Coinbase will most likely remain pretty stable throughout the remainder of the year, we get net income of $646 million. So assuming that revenue does stay stagnant, we will expect a decrease in net income by right around $130 million each quarter due to the fact that they're spending more money on sales and marketing, which in my opinion is completely fine with a company like this, which with such high margins, they should be spending as much money as possible on sales and marketing to get their name out there and get their brand out there as well. And obviously there is an argument that, an increase in sales and marketing spending doesn't just benefit a company like Coinbase, but benefits other cryptocurrency exchanges and the crypto industry as a whole, as more people get aware of crypto as a whole. So, using this, we get net income of $771 million in Q1. We know this. Assuming this whole situation here with this increase in sales and marketing expenses, we can assume every quarter Coinbase could potentially, again, this isn't 100% accurate. These are all just my numbers, by the way. This isn't financial advice or anything along those lines. But assuming that these numbers are correct and revenue stays stagnant and that sales and marketing expense increases, we can expect $650 million in net income on a quarterly basis moving forwards. So obviously multiplying that by Q2, Q3, and Q4, we get potential net income at a company like Coinbase of $2.7 billion for full year 2021. Now what we can do is take this number and estimate a pretty accurate price to earnings ratio. Currently, the fully diluted share count at a company like Coinbase, I like to use the fully diluted share count as it essentially is what the share count will look like down the road and does give a more accurate representation of the current value of the stock. We get right around a market cap of $70 billion with a price to earnings ratio of 25.5. Given the pace of innovation within the cryptocurrency space, I personally believe this is pretty low. But we also do have to consider that the share price of Coinbase has declined substantially since they went through with their direct listing. They hit a high of right around $420, and paired with, a general pullback in cryptocurrencies, which actually doesn't impact Coinbase's business, but an overall pullback in the market, we've seen a substantial decline in their share price and thus their valuation. So trading at a 25.5, this is their current price to earnings ratio, and based off of 2021 numbers, this is what you're paying for a company like Coinbase. Now let's flip the switch to a company like Voyager Digital, try and figure out their valuation and exactly where they compare with a company like Coinbase. So first, if you don't know what Voyager Digital is, they're a cryptocurrency brokerage. They offer pretty similar services to a company like Coinbase, but they have very high interest rates, much more tokens, and much more interest-bearing tokens at that, and they're obviously much smaller and growing at a faster pace. Currently, they reported $8.5 million in revenue for the month of January, $20 million in revenue for the month of February. In my estimates, based on the data that they gave us with trading volume and increase in customer assets, I have them doing right around $31 and $60 million in revenue for the month of April. This is arguably incorrect or correct. I personally think it's in the ballpark of anywhere from $50 to $60 million, but you could assume potentially this bit of optimism when it comes to April numbers will be offset by this somewhat low compounded monthly growth rate. If you take a look at the growth they've been experiencing as a company month over the past 4 months, it's significantly lower, or significantly higher rather, than what I'm expecting moving forwards. And obviously with the law of large numbers, we do expect percentages to decline, but generally speaking, I think Voyager has a shot as long as cryptocurrencies continue to do well, and as long as they continue to expand into potentially Canada, New York, and Europe. I think this company has a shot at, potentially compounding over 20% monthly. So you do have that conservative aspect of it, but we're also being conservative with Coinbase's numbers, so that is something to consider there. But either way you look at it, I assume right around $1 billion in revenue for Voyager Digital going forwards into 2021. That is my personal estimate when it comes to Voyager. Now, the company said that they have EBITDA margins of over 50%. This is what the CEO, Steve Ehrlich, said on an interview many times in the past. They're kicking off 50% EBITDA margins at the company. So that's earnings before interest, taxes, depreciations, and amortizations. And with a company like Voyager Digital, which has very minimal product kind of expenses and things like that, it essentially means earnings before taxes. So we have essentially an operating margin of 50%. It costs them maybe $50 for every $100 in revenue, potentially on employee expenses, on advertising expenses, on actually running the product. So their cost of sales is actually lower than a company like Coinbase, and you could say they do have a much smaller team. I believe they only have 100 employees at this moment in time. So that could definitely be one of the ways that they end up saving money on. But, just generally speaking, this is a business without many expenses and with very high margins. So earnings before taxes essentially are currently right around 50%. Absolutely phenomenal. And I'm going to use the same tax rate that we had on Coinbase, which in my opinion, a company like Voyager could very well end up paying a much smaller tax rate within 2021, essentially doing tax loss harvesting with the money that they lost as a company for the prior years. They started in 2018. They've been unprofitable since. So they could use those kind of losses to offset some gains and pay much less taxes. But again, using that same 22.6% tax rate, we get net income at the company of $411 million, or a 38.7% net income margin, a little bit higher. Now, the current valuation of a company like Voyager Digital, using the fully diluted share count and the current share price, is $3.2 billion. This gives us a price to earnings ratio using 2021 numbers of 7.7. That is crazy low, 7.7. Remember, Coinbase was trading at a price to earnings ratio of 25.5. Significantly higher, right around 3.5 to 4x the valuation of a company like Voyager Digital. Now, one of the things that we have to consider that a company like Voyager, they're much smaller. So they have a much kind of easier path to growth than a company like Coinbase. Picture it like this. Is it easier for a company like Voyager to go from $1 billion to $2 billion in revenue? Or is it easier for a company like Coinbase to go from $8 billion to $16 billion in annual revenue? It is easier for Voyager because they're obviously a much smaller company. So moving forwards, I honestly think a company like Voyager should be valued potentially even more than a company like Coinbase. But, when we look at the Coinbase valuation and whatnot, I personally do believe it is way too low. I think the cryptocurrency exchange market and the cryptocurrency market as a whole, when it comes to the stock market, is being very, very disrespected. A lot of the miners are trading at ridiculously cheap valuations, and a company like Voyager and Coinbase are also trading pretty low given their growth. Let's assume a price to earnings ratio of 20, right around 25% lower than the valuation of Coinbase. We get $47.81 per share at a company like Voyager. That is in and around a 3x in share price. Phenomenal. If we use that same valuation of potentially 25.5 price to earnings ratio that we had with Coinbase, we get a valuation or a share price at Voyager of $61 per share. If we assume potentially Coinbase is valued a little bit lower than it should be, or if we assume potentially Voyager should be valued a little bit more than them due to the fact that they're growing quicker, we can assume a share price anywhere in the range of $70 to $120 per share. So what are my thoughts on this whole situation between Coinbase versus Voyager Digital? I think Coinbase is trading at a cheap valuation in comparison to other growth companies out there. But given that Voyager is a smaller company with a larger pathway of growth moving forwards, I think a 7.7 times earnings multiple is just insulting. And using Coinbase as a benchmark provides a large pathway of growth to Voyager's share price moving forwards. I think a lot of this is just Wall Street not yet realizing the story with Voyager, and it's really going to take the next couple of earnings reports for Wall Street to really understand exactly what's happening with that company in comparison to a company like Coinbase. We also have to consider the fact that the cryptocurrency market and cryptocurrency related stocks have been going down along with the rest of the market over the past month or two. So, that paired with a potential misunderstanding with Wall Street may be one of the things pushing these valuations down. We also have to consider the fact that Wall Street, or a large portion of Wall Street, is expecting a bear market in the cryptocurrency industry going into 2022. One of the arguments against the potential bear market is the fact that institutional ownership within cryptocurrencies is at an all-time high. And if you watched my video yesterday on Coinbase, you'll see that institutions actually own more cryptocurrency within Coinbase than retail investors do. There's a lot more institutions, and that may dampen the impact of a potential cryptocurrency winter. So that's one of the arguments against that. But obviously, if we do get a crypto winter, it will impact both Coinbase and both Voyager Digital. On the valuations, I currently own right around 40% of my portfolio consists of Voyager Digital shares. I like the company, and at these valuations, I think they're an absolute steal. In comparison to a company like Coinbase, I think they're a great buy as well. Obviously, I can't tell you to buy or sell a stock, but in my opinion, they are trading cheaper than a company like potentially Enphase or Tesla or other growth companies out there in the stock market. Those are just a few examples. But I just think it's the general cryptocurrency industry that has yet to be recognized by Wall Street and yet to be fully respected. We also have to kind of mention the fact that Coinbase has yet to offer Dogecoin and a lot of other altcoins on their platform. And in their most recent earnings call, they said that smaller companies and smaller brokerages like Voyager Digital are taking market share from them. So that's a very nice thing to hear if you are a Voyager investor out there, and makes me more optimistic and bullish on the company moving forwards. Anyways, guys, thank you so much for watching this video. I really appreciate you being here. If you found any value in it whatsoever, please consider subscribing, and I'll see you all next time.